All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here today. But I want you to stay right there because at the top of this hour, the Cow Guy closed. That's 1 Central, 2 Eastern. We got another great show in store for you. Boy, there's loads to talk about, folks. I mean, there's a lot moving our markets, a lot moving all the markets. So you don't have to do anything. Just stay there. You don't have to touch the television, and you can just let it roll on to 1 o'clock Central, 2 o'clock Eastern, and you can watch the show. And if you can't watch it, DVR it. If you missed that too, and you've got some stuff to do in the field still, I understand. So we put it on the radio, rural radio. That's Sirius XM channel 147. We put it on late afternoon, early evening, 5 p.m. Central, 6 p.m. Eastern. And if you missed that one, we give you one last chance in the middle of the night, 2 a.m. Central, 3 a.m. Eastern. And that's the Cow Guy Close on channel 147, Sirius XM. So you get two places to listen, one place to watch. I think watching is the most fun, right? You don't get to see this ridiculous jacket, do you? And that, again, is going to be at 1 o'clock Central, 2 o'clock Eastern at the top of the hour in exactly 16 minutes from right now. All right, let's take a look and see what the markets have got in store for us as we go home for the day. Let's take a look at corn. It's been down about a penny to 2 cents all day. That's where we still are. 427.5 is last. That's December, a penny off the low of the day, and we've had a 5-cent range. There, that tells it all, right? March is down 1 1/4 cents to 438.5, and that too is about 3 ticks off the low of the day, and that's been about a 4-cent range there. So that's corn off between 3/4 cent to 2 cents across the board. All right, let's move along. Soybeans. That's down 11 3/4 cents in Jan. It's still below that $10 line. We gave it up, didn't we? 9.98's last there. March is down 10 3/4 cents to 10.08 1/4. Let's move along to see what wheat's got in store for us. This is in Chicago, 3.5 cents better there to 5.50 3/4. March is up 3 cents to 5.68 3/4. That's the Chicago wheat. Moving from Chicago, we go to Kansas City, and that's going to show us the hard red wheat, 3 3/4 cents better, and Deese 5.59 is last there. March, that's up 3.5 cents to 5.70.5. That's the hard red in Kansas City. Let's move out to the spring wheat and see what that's got for us, and it's a little bit of a gain. 1 1/4 pennies better there. Deese trades at 5.86 1/4. Well, the March, that's up a penny to 6.05 1/4, and then finally, cotton, well, that's been higher all day today, but not by much. 11 points better right now as we check in before the end of the day. That's December, trading at 66.73. Let's bring in our next guest analyst, Ted Seifried, Zaner Ag Hedge. He's up in Chicago. Ted, thanks for being on. Okay, I don't know. There's lots out there. What are you focused on?
Well, first of all, yes, all the viewers would be remiss if you missed the wonderful, wonderful Cow Guy jackets. They are fantastic. That's the highlight of the show. That and your wonderful sparkling personality, Scott.
Okay.
Okay. So, what are we seeing? Beans are leading the way lower after wheat tried to lead the way higher yesterday, and beans had a nice reversal yesterday. But we're giving back those gains. And the question is sort of why? Well, I think part of that is that now that we've got that friendly USDA WASDE report behind us, the question really is, what's the next big bullish news that we're going to get for soybeans between now and the next time that the USDA looks at production, which is in January, not December? And the answer to that is, I don't know. Really, I mean, I guess if China were to come in and start buying aggressively before the change of administration, that would do it. But that has not been the indication. That has not been the case as of yet. If anything, there was a story that broke at the end of the day yesterday, which we knew something about, right? I mean, Chinese President Xi is in Brazil right now for a feel-good expedition, and that there is going to be an announcement on agricultural relationships with Brazil and China on Wednesday. So the question is, what is that announcement going to be? Is this similar to what we've seen in the past when we've had Chinese delegations come to us? The last real one of those was in 2017, where they make a ceremonial purchase. And in this case, could it be a big purchase considering that Xi is there? And could it be for corn as well, right? So might not be good for grains, that whatever this announcement is going to be on Wednesday. But you could also say it might not be very good for livestock either, even though the market doesn't seem to be thinking that at the moment. I have a feeling, are going to get into that in a moment.
What have the volumes been like real quick?
Yesterday kind of felt like the previous Monday when we had the Veterans Day holiday. It was really rather light. So that decline that we saw in beans kind of through midday was on fairly low volume. It's been a bit better volume today. So I feel like this is the more real move.
All right, great stuff as usual. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried. Why I can't get that out? Ted, thank you. We'll be right back. We'll talk to Ted in a second. All right, welcome back. Thank you very much for staying with us. Let's take a look at the livestock, right? You wear a livestock jacket all day. You got to bring up those prices. Let's take a look at live cattle. We've come back again. A little bit stronger, $2.30 better in the D's. 186.40s, last 12 cents off the high of the day there. Feb's up $1.92 to 187.90, just 10 cents off the high there. We like that. Let's go to the feeders. They've moved higher as well. $2.40. Well, let's go. $2.60 better in the Jan. 252.10 is last there, just 35 cents off the high of the day. And we've got a March board up $2.72 to 251.35. And again, that's about what, 32 cents off the high of the day there. So that's feeders. Let's move along to see what we've got going on in the lean hogs. 42 cents lower in D's lean hogs. This has been lower all day. 79.60s last in D's. Feb's trading at 82.90, down 37 cents. Let's bring him back in, Mr. Ted Seifried, Zaner Ag Hedge in Chicago. Ted, thanks for sticking around. We got exactly 120 seconds for you. So what are your thoughts here?
You know, it's great to see the live cattle really finally starting to play along here. You know, we had feeder cattle sharply higher on Friday, again on Monday, and then now today, also, like you said, sharply higher. But the live cattle really didn't respond to that. In fact, they kind of fell flat on their face on Friday, better day on Monday, but, you know, still kind of felt like you needed to see a bit more. And finally, today, we are seeing that bit more. So, you know, feeders are the leaders. And when you didn't have live cattle following you, you were wondering if the feeders could continue to do it by themselves and if this was going to be a delayed reaction. And at the moment, it is feeling that way. So it's refreshing, relieving to see the live cattle trading higher here today. All that being said, I do feel like if we get back into the 190s on the December live cattle, that might be a really good place for producers to be looking to protect some downside. We're not there yet. We'll see how we follow through the rest of the week. As far as the hogs are concerned, you know, as forementioned, the Chinese Chinese President Xi is in Brazil, making relationships or continuing or you know solidifying relationships with Brazilian ag companies. I think this is certainly something that can impact grains, but you wonder if this is going to impact the livestock even more. I worry about hogs, right? If we get an announcement on Wednesday that says, you know, China's opening the doors to more hog exporters out of Brazil or potentially beef as well, that could be really negative for the market. But it's a lot more negative for the hogs market than it is for the cattle market because cattle is a much more domestic market. We don't export a huge portion of our balance sheet like we do as far as hogs, and we do a lot of business with China in pork. So I'm worried. I'm a little worried about how that.
I don't like it either. Yeah, I don't like it either.
Yeah.
I agree with that, and you're right with the grains as well. But I just, you know, the alliances, the money, all the things that have been poured into that down there, it doesn't look good. I don't like it. So I'm on board with what you're talking about. I agree. There's some risk there. Appreciate you coming on, Ted. Ted Seifried, Zaner Ag Hedge, coming to us in Chicago. We're going to bring it back down here to Nashville, and I'll throw it back over to Suzanne.
Thank you, Scott. Of course, coming up, Cow Guy Close at the top of the hour. More in depth on these markets.